So this is more capital markets, but so maybe I'll back up and explain about digital asset treasury companies. So the first one was, I mean, there have been companies that have dabbled in owning crypto on their balance sheet. Tesla was the most famous, but really, in my mind, the digital asset, what separates like a company just investing in crypto versus a digital asset treasury company are the companies that actually go out and try to raise capital to buy more. And so the first one was really MicroStrategy. In August 2020, they were tired of seeing the purchasing power of a dollar continue to fall. So they remixed some of the cash that they held on their balance sheet into Bitcoin. Price of Bitcoin started to move up. Their stock was rewarded. And then they actually started to raise additional funds to buy more Bitcoin. And the rest is history. And so what I'd say is that they've been able to engage in what I call this capital markets flywheel, which is almost tantamount to capital markets arbitrage for the benefit of shareholders. And I'll explain how it works. And so essentially what happens is the market will award them a premium to NAV, or the net asset value, or the value of the Bitcoin they hold. Let's just say they hold $100 in Bitcoin. The market might ascribe like $200 in terms of like their market cap. There's a number of reasons why the market might do this. One is because they want to access Bitcoin in the form of a familiar equity security. You want to buy Bitcoin in your Schwab account. Now, obviously, you can do that in the form of a Bitcoin ETF. You can't do that with Sol quite yet, but still, a lot of people want to buy it in this form, and so that is like one reason why they might pay up for it. The second thing is just back to my banks example, where if MicroStrategy can borrow funds at a certain cost of funds, and then they can invest into Bitcoin and earn a certain return on the Bitcoin. And if the market expects that return on Bitcoin to outpace its cost of capital, it earns this positive spread. And so the market will actually present value all of that and add it to the NAV. And therefore, it works out to be something that is this premium to the amount of Bitcoin that they hold when the market expects very strong forward Bitcoin returns. And so MicroStrategy right now is trading at 1.7 times. Over the last year or so, it's traded anywhere between 1.5 and 2.5. But then MicroStrategy can actually monetize that for the benefit of shareholders. It really does this in two ways. It issues equity above book, which is by definition accretive. So when MicroStrategy issues equity at 2 times NAV, they're essentially selling a dollar for two, or it is actually tantamount to buying Bitcoin half off. The second thing that it will actually do is it will go out there and it will issue convertible debt. And so the way that convertible debt works is if I want to raise funds, I raise a $100 convertible note from you, you give me $100. I give you this note back that says in 5 years, I'll give you your $100 back. And then what happens is you can either basically take that $100 back in 5 years, or you can convert that to my stock at some conversion price, which is normally above the current market price. And so what that allows me to do as the issuer is it allows me to sell stock, essentially assuming it converts at a price above the current market price. It delays that dilution because you can't convert this immediately. And it also gives me very cheap free funding for 3 or 5 years, however long that note is. And what it does for you, you're a bond investor, you have this mandate to where you can only invest in bonds, which typically return like 2 to 7%. And now all of a sudden you have access to Bitcoin like returns. And so actually until recently, and all of these are new, every single Microsoft convert or MicroStrategy convert issuance had actually outperformed Bitcoin itself. And so these bond investors were making a killing off of it. And then number two, because MicroStrategy has this very liquid options market, they've now attracted all of these like convertible arb traders as well. And they're basically buying these bonds and they are delta hedging the implicit option in this convertible note. And what that means is when you delta hedge, you are by definition selling high and buying low. And so the more volatile the underlying, which is MicroStrategy stock, the more money they can make from delta hedging. And so the more they're willing to pay up for that bond. So MicroStrategy, in essence, is monetizing its volatility and selling it to convertible bond arbitrageurs. And so anyway, long story short is there are all these things that they're doing on the capital markets front that basically accretes value for their existing shareholders. And then that emanates and results in increasing Bitcoin per share. And then as Bitcoin per share increases, because you're issuing equity at 2 times, you're buying Bitcoin half off, your Bitcoin per share is rising, your stock in theory should move up by a similar amount, and that supports your multiple. And then the whole thing continues and allows that cycle to continue to repeat.